What's up, Outliers? Happy Tuesday. I just finished doing a quick GME update video. I'm actually going to launch it while we're hanging out here. But as always, I'm looking forward to catching up with everybody, talking about really whatever you guys want. I am doing this session kind of as like a tester to see if we want to do these a little more regularly, kind of like on Tuesday, like a sneaky little Tuesday session. Not our standard programming, but, you know, I'm always down to try some new things, get weird. And then the other quick update, though, is I am going to be doing a GME stream on Thursday. I already hit Newton up. He unfortunately cannot make Thursday, but he and I are going to link back up. I have some non-availability coming up, but I plan to kick back off on the 11th of August. So I will be back at it, ready to rock and roll with you guys come then. However, before then, that's more or less what we're looking at. So, what did you all see out there today? Anything stick out to you guys from a market perspective? There was a few things I think from at least earnings that stuck out to me that I do want to take a look at with you all. And then there's a couple things that I want to take a look at from like a general news perspective. But if there's anything in particular that you would like us to poke through, you already know. Drop it in the chat and we'll take a look. But we got to say hello to everybody that is here. Let me grab this chat, slide it over here so I can keep an eyeball on all of you fam. And let's see what we got. Whoa, that's a tough one. Sooljo, congrats on being first. Shout out to you. You really laid the performance out there for everybody to model performance. Jeffrey, good to see you. Tommy, unknown reducer. There we go again with unknown reducer. Let's see what kind of wild goose chase you decide to send me down today. Really looking forward to that. Can't wait. And we got Cameron, Dom, Bean, what up? Derschlup, that's a hell of a name. Bean saying Microsoft went down a little too much. Microsoft, same thing from Tommy. Solo Dolo, talking about some Mara. Ben Wallballs is here. Paulo is also here. Tommy doing the Lord's work, letting you guys know that I'm the last person on planet Earth to ask about penny stocks because I hate them. I'll still look at them. I'll look at anything, but I'm going to talk shit about it the whole time. There's very little reason to be in penny stocks as a grown adult, I think. Unknown Reducer says, forget about yesterday, man. Unknown Reducer, I think, might not understand my ability to reduce down sentiments towards people into just blind hatred that stands the test of time. So, like I said, I think we're on even footing here because you were cool enough to join the Outlier YouTube channel and support the work. So there's some love there. That's why I'm being so nice to you, realistically. Otherwise, you know, we would ratchet this up mega fold. So yeah, you know, give and take out here. It's give and take. All right, so let's see what you guys got. Unknown Reducer is asking, are those cars his? Yes, they are mine. Why else? That would be very strange to put pictures of other people's shit on my stuff, but that is my stuff. Dom says, for GME, how would you determine if 18 to 20 is a good entry for shares? What are you looking to establish an entry? That's actually a great question. So the video that I literally just launched, I'll throw it in here for you all to check out after we break out of this live stream. But here's the video that I just put out. It's super short. It's like 5.5 minutes, which for me is about as short as it gets. Most of my videos tend to be like 15 minutes minimum. But this one, it was mostly just to keep the cadence up. But here's the Cliff Notes version. To decide if I like 18 or 20 really depends on where I think I want the stock. And for me, that's not the way I trade. I don't trade by picking a price that I want to buy it at. I actually don't really care what price I buy it at. What I care about way more than anything else is the product doing what I want? And right now, as I've already told you guys, I still maintain a GameStop position, and I have no options in it other than the short calls against the long shares. When I say no options in that context, I mean to play the upside. Those are all down, and I have short calls against the long shares because I fully expected this, to be completely honest with you guys. It's in a very standard bit of a decline here. And to me, this is more representative of more standardized technical analysis and technical behavior of a stock. So what I'm seeing here is we have this big old volume node that it's at this point not necessarily supporting anything anymore. The stock was trading about that. This started to get me concerned. This I thought was hopeful. This day here, I thought maybe it was going to turn the corner and rally back up, and then it kind of just failed and rolled back down. So all of that to me indicates that it's in a bit of a decline here. So this isn't necessarily where I personally look to add a bunch of long shares. Again, for me, it is a function. I'm a trader, and I always think it's important to remind you guys of that, because I know a lot of people that come hang out from the ape community are holdlers, which is cool. Like, everybody has to have their approach, and it's just different than mine, because my approach is predicated on finding things that are making movements that I can capitalize on and speculate on. If something is doing this, I could speculate on it realistically to the downside, but I don't want to do that. So I'd rather be skiing says can do both, own the shares and trade options. Yeah, it's literally exactly what I do. But going back to the original question from Dom about whether or not I would buy at 18 or 20, that's not how I think about it personally. What I think about is I want to buy GameStop as it's going up, as it's showing strength. That's my preference. Now, for other people, if you're like a long-term holdler, it's a little bit different, because you might look at it and say, well, I think 18 or 20 is at a bargain and I really like it there, which I think that's okay, right? And that's why I make the distinction for you all to be able to understand. I think it's so important for people to understand the bias and the perspective of somebody like me, right? Who's sitting here sharing my thoughts about markets and my experience. You should know my perspective, not because it matters. It only matters in the context of you as you're filtering what I'm saying for shit that matters to you and shit that doesn't matter to you. You should know the bias. So again, like, as I'm talking about this from a trader's perspective, I want it to go up. Now, the perspective of a trader, you might not care at all about it. And you might say, I like it on the way down. And that's totally, totally cool. There's different ways to work in this business. I just kind of focus on what works for me. So anyways, there's just a lot of ancillary details for Dom in the response to his question, because what I don't like saying is, because he's asking for my opinion, right? He's saying, how would you determine if 18 to 20 is a good entry? And again, for me, the way I determine if it's a good entry is if it's showing signs of support between 18 and 20, there's good buying pressure, and it's starting to rally out of that handle. That's how I know. But again, that's just my approach. There's lots of other approaches that might work really great for people. And I think that it's, good to call that out. John says, I feel like there should have been a squeeze, but it was suppressed too damn hard. Well, I feel like you have to be careful with those kinds of sayings, right? Like, because to me, that starts to open up the trader for a bit of an analysis bias, where our perception of what should have happened is weighted too heavily. And the reason why it matters is in future analysis. The way that I would remind you to think about the market is whether it does what you want or it does what you don't want. It doesn't really matter. That's indifferent, but it's doing what it should, quote unquote. And what I mean by that is it's just doing what it does. There are a lot of different specific components to it, and that's not getting in the, you know, the rabbit hole of like manipulation. We shouldn't have to deal with that, but we do. And that's a specific fight that we should fight. But I would just be really cautious about going a little too far into the idea of like something should have done something else. It's hard to make money in trading with that kind of approach. All right, back up to Bean, who says, I think Microsoft overreacted to the downside. Let's take a look at some MSFT. Yeah, I agree with you. I think it's not done yet, right? Because it just had earnings and it's now down at 411. So it's going to be down here near this support. So the way I look at something like Microsoft is, where do I like it and how would I trade it? So for example, with it going to be down here at like 411 after this earnings release, like it's just going lower and it's facing additional pressure to the downside. A great example of the idea of like something is too low or too high is going into CRWD. People thought it was oversold here. People thought it was oversold here. People thought it was oversold here, here, and here. And guess what? It still is going down. So when I was first talking about trading it, I started trading it here, playing it in the center. So I traded it actually to the upside on this day as it was showing strength, but I knew I didn't want to hold it. So then I set alerts for essentially the outsides of this move based on support and resistance over here in kind of this congestion zone. And then I said, I'm just going to trade it to whatever side it breaks. If it breaks to the upside, I'll trade it with something like short puts. If it breaks to the downside, I'll absolutely trade it. And that's exactly what I did in CRWD. And the bad news hasn't slowed down for them. If you take a look at Delta Airlines, they hired an attorney to seek damages over the outage. So what that means is that, like, it's not that I care about Delta Airlines per se, but they're a great example of the beginning part of this process, right? It's not just going to be Delta Airlines. There's going to be other people jumping in on this, as they should. So that is not good news for CRWD, CrowdStrike, and I think it will continue to be a problem for them. If we take a look at their probability analysis, I'm curious if the market has started updating it yet. So let's take a look at the probability of a touch. And let's see. So what I'm doing now is I'm just eyeballing the distribution of this curve and the way that it leans off the center at different points. So it's going to plot at different expirations the extremes. So for example, this is at a 152 handle, 153, and this shows a 16% probability, and then this is 344. And spot price is 232, right? So what this tells me is the market is still pricing in a bit of downside. So, and it doesn't surprise me. It seems completely warranted with the way that this thing is behaving. That Lauren said, did they really offer a $10 Uber Eats gift card? I think I've heard that. Let me double check, 'cause that's actually hilarious. CrowdStrike Uber Eats. There you go. There you go. Listen here. Take your $10 Uber Eats, and they're sorry. So, you know, I feel like all is forgiven at this point. I feel like we don't necessarily need to worry about all that litigation and damages and lawyers. I think at this point, we're just kind of happy at this point. Just take the $10, right? Just here's $10. That's kind of nice, right? That's a nice gesture. It's to its partners. I mean, that's just really, really nice. It's only 8.5 million Windows devices that shut down across the world. This is actually fascinating. I did not know this. This is actually very fascinating. I would not have expected this. that it affected less than 1% of all Windows machines. Did you guys know? I did not know that. Based on the news that I'm seeing, I would have expected it to be much more severe than that. I get that. Just have to keep it a buck. Or I guess in their case, keep it $10. No more than that, though. That's all I'm going to do is, I love this. Look at this. And for that, we send our heartfelt thanks and apologies for inconvenience. To express our gratitude, your next cup of coffee or late night snack is on us. Yeah, the late night snack is probably going to be on them because they're going to be up all fucking night trying to fix your shit. That's hilarious. I always try to give organizations as much credit as I can. One of the reasons why I try to do that is because it's so easy from my perspective to like judge what other people do, right? I'm in such a great position. This doesn't really affect me. So how easy is it for me to just sit there and be like, what a terrible choice. You guys are stupid. But this one, like, I really do kind of wonder what they're thinking. I have to wonder. Paulo says, if there are no alternatives to quickly replace CrowdStrike, price will recover. I don't agree with you. I think that that's a bad way to think about this. Now, I want to be clear. That's not to infer I don't think that could happen. It absolutely could happen. And I also would wager, me personally, I think it's more probable to go generally Paulo's way as he just outlined, but the way you phrase that is what I'm highlighting that I disagree with. The reason being is because the idea of price recovering is based on the future projections of the company. Depending on how this lawsuit stuff goes, that can really cause them problems. So to your point, and again, like I personally would still believe more likely than not, price will recover. I do think that. I just wouldn't immediately jump to that conclusion that price will recover as compared to price can recover, because price can get dumped for a long time. And to your point, again, depending on what quickly means or how fast that infers, I just don't necessarily see that as like the primary outcome. Joey says quickly replacing core infrastructure security is unlikely too. Completely agree. And like I said, I think the overwhelming probability would be for them to figure this out. But depending on where they land in litigation and how expansive this is, I think that is the bit of a problem. Paulo says absolutely when it will recover is anyone's guess. I agree with that. Yeah. I guess maybe I just read too much into where you said to quickly replace CrowdStrike, because yeah, to me, this can stay suppressed for some time, depending on how bad this goes. But based on what you guys, or what we just saw in that article too, it's obviously not the worst thing if it's less than 1% of machines. Now, the problem that this does bring though, is that this absolutely, Paulo says some legal settlement might trigger jump up. I agree with you there too. You can actually trade quite a bit to see where you can actually see like trading stuff like that, different kinds of legal cases and whatnot. So yeah, I completely agree there. As soon as it starts looking better for CrowdStrike, like that's the way I would think about it. As soon as the narrative starts to change a little bit, then I think price will start to recover. Before that, we don't know how far down this can go, and we don't know how long then it will take for it to recover. So for example, we've gone from 398 to 226. So that represents literally a 43% decline in the underlying value, 43% evaporation. To me, my first thought is that seems excessive. And I also think that that seems a bit overdone. But we also have to remember this handy dandy chart from good old esinvest.com. Purposely made this for you guys to be able to download these. And you can see if we have a 40% decline, we need a 66.7% positive return in order to get back to break even. So as CrowdStrike had a decent year, let's see what it did year to date before that drop. And let me grab my other calculator. Where did we open? We opened at 251. So 251. So that's a 37% move. A positive 37% move over the course of 7 months, which was undone and then some by a 44% down move that occurred over 2.5 weeks. The market takes the stairs up and the elevator down. That is an adage as old as you can think, and it continues to remain true. Part of this is from a really important market function, which is this idea of stock market informativeness and how noisy pricing is. So let me see if there's a good study for you guys. Here you go. I don't know how good this one is. We'll take a look at this one together really quick. There's a couple that I really like, but I'm purposefully picking this one because I'm curious. And let's take a look at what we got. Look at us go. See, you have no idea how fun this is for me that there's 60 people on this right now reading a paper from SSRN about noisy stock prices. That is so cool. The idea that there are people out there interested in this shit like I am is so fun for me because, like I said, right now, my dog is just bundled up in his bed and he doesn't care at all, believe it or not, about this. It's hard for me to believe personally, but he doesn't care somehow. I don't know how that could be true. But anyways, let's see. Using volatile correlated liquidity shocks to investors as a source of noise trading. And so you guys know what this, do you guys know what this is? Noisiness and like price discreteness. If not, let me know and I can go into it a little bit more. Noise in stock prices does not affect product market demand, but reduces firms' total factor productivity, profit margin, and performance in R&D. Further evidence suggests that noise in stock prices impedes real efficiency through 3 plausible channels: distorting investment decisions, yep, increasing the cost of capital, yep, reducing efficacy of equity-based incentive contracts. Yeah, I mean, that all makes a ton of sense. Interesting. Yeah, so the thing to know about this is actually an important function, especially if you're like a momentum trader, a breakout trader. This idea of information discreteness and how quickly it can be synthesized into a stock price is highly informative for performance. What you're seeing here is crazy. And this is exactly that. This is a lack of information discreteness. And this is a persistent baking in of information, but it leads to extremes. There's actually a dude that I interviewed on my podcast. He's a Marine officer. He's a straight up homie, and he runs a fucking $1 billion ETF fund, which is really cool. And so there's a really, really cool, let me see, trying to find this old paper that he has. I'll have to find it for you guys later. But anyways, he has a really cool paper that looks at momentum style strategies through, maybe it's a book. But he looks at momentum following strategies through the context of information discreteness. And long story short, when price information is indiscrete, meaning it takes a while to get baked in, it leads to excessive price moves one way or the other that tend to lead to opportunities. That's the one sentence window liquor version of that entire paper. So yeah. All right, back up here. Let's see. Matthew says, any thoughts on NVIDIA sell off? Let's see. NVDA. Yeah, it doesn't look good. And the question is, after the seeming good conference with Jensen and Zuckerberg, I don't know if this is from that, is it? I don't think that's what's causing this sell-off here personally, at least as far as I know yet. But we'll take a look together. Mick D says, made it. Welcome. Great to see you, Mick D. It says NVIDIA soaring all-time highs. Well, that ain't it. We need to get some new stuff here. Unveiled significant updates to software suite. Cool. Taiwan Semiconductors. Yep. Drops ahead of big tech earnings. Yep. This says NVIDIA edges down. What does this say? Likely to react to Microsoft fourth quarter earnings. That was exactly my guess, is that this is a partially sympathetic move with other tech companies. So one of the things that you'll notice when you're trading products like this is you have to understand like the context of the movements that it's making. And when you're going through earnings, especially this kind of earnings cycle, to see these kinds of correlations between these products it's literally not surprising to me in the least. This is that, yeah, I don't think this has much to do with that conference at all personally. I think that this has to do much more with just the broader tech sector and where we're at, because the tech sector has been selling off, and it should. Because this has been a massive, crazy move that, I mean, you can't go from 60 to 140 and then just into perpetuity into the fucking sky. Things do need time to digest and settle out. You got to shake weak hands out. You got to bring in new money that has conviction. So this seems kind of generally normal to me. Back up to the top. And then, by the way, if I miss one of your questions, it's obviously not on purpose. Feel free to drop it in again. I'll try to get through some of the questions that are really far up, and then I'll probably get back closer to the near-term chat. Solo Dolo says, when gamma scalping a call that went up in value, selling short the stock, but keeps going up, do you just hold the call until expiration and exercise at the lower strike in that situation? I don't know why you would do that. Do you just hold the call until expiration and exercise at the lower strike? Well, first, I need to understand what you're trying to do with this gamma scalping position. Because if you're just long a call, I don't see really what you're trying to accomplish there. That's not something I typically would gamma scalp around. So Solo Dolo, need a little more context there. John says, I'm intrigued with the Andrew Left situation and the activity of future short sellers in the market. Do you think this investigation will have a big deal for the market? I do. I think that something like this with Andrew Left has significant potential. And Andrew Left is a fucking peon in this whole thing. And I think that's what makes this interesting, is this case with Andrew Left. As I've already talked to you guys a little bit about this previously, a lot of people are a little disenfranchised. They're like, oh, Andrew Left doesn't matter. He's a peasant. He's 5'7". Like, yeah, I get, these are all things to not like him for. I agree with you. But the problem here is he's just a drop in the bucket. And I think that the SEC and the DOJ even looking at this is very cool. And it's a look in the correct direction. Now, my hope is that this will stick. And we've seen some recent instances where the SEC has gone after people like Atlas Trading, where there was nothing short of like a smoking gun in that, in my opinion. Again, I'm not a lawyer. I don't really know. But based on like the text messages and shit, the Discord messages that they were grabbing, like it seemed like a smoking gun to me. And he still got out somehow. So, you know, it's not a slam dunk, unfortunately, but I'm really interested the way that this goes. He did plead not guilty. Wow, that's jeez. This is a hell of a picture. Let's see. Andrew Left, founder of short selling Citron, pleaded not guilty to several charges of fraud. He appeared in a 40-minute long hearing. They imposed a $4 million unsecured bond and a $1 million collateralized bond. That's actually kind of nuts, TBH. Left, who once said the cryptocurrencies industry was rife with fraud, will need to post a collateralized bond by 5 AUG. He has to surrender his passport. After the attorney says that he has more than 70 million in assets, including property abroad. He can walk out of this country and live a very luxurious life. That's smart, I think. They cannot make any financial transactions above $100,000 without special permission, and his trading activity has been restricted. They were cuffed during the court proceedings. Answered the questions with one word, yes or no. That's smart, to be honest. That means he's been advised well. Also, shout out to us, 69 of us. Any chance I have a time to do that, shout out to you guys. I actually can't believe you're going to let me continue talking without calling that out immediately. It's a little frustrating, but I forgive you guys. But okay, back down to 67. Anyways, I saw the number. We're good. Giggity. But this says... they're saying that he made 16 milli, making bait and switch recommendations that misled retail investors, bought back stock after telling to sell. So this was him essentially just using his platform. They've used, so I think this is where, this is why Cointelegraph or whoever this is involved in this, is because there are elements of this that crosses over into crypto. But it's not restricted to crypto. I also don't necessarily think it's a mistake yet that GameStop hasn't really been brought up in this conversation to any significant degree. I don't know exactly what it means yet. I haven't quite made heads or tails of it yet. I wonder, though. See, this is not good. I don't like this. The reason why I don't like this is because... I hope it's not meritless, because if it's meritless, it means that it has a low probability of making its way through. So I actually don't love that. Risky, no limit. Yep. They're just talking about the risk to short selling. Cannot be said often enough. Accurate prices in the stock enable more informed. So this is talking about the good side. And I don't hate short selling. I don't like it much myself, but like it is good for efficient markets to a degree. Now, naked short selling and all that kind of bullshit, I don't think so. I think it's been abused and then some. Then you have something like seller boxing. So I'm not an advocate of the way that it represents as is, but I do see it, again, objectively as a mechanism that, if done properly, can aid in market efficiency. And I think that it can, just as we can find things that are undervalued to the downside and priced to an extreme low, you can find that to the upside as well. So yeah, I think that that's fair. Now, anyways, I'm trying to see where the meritless part. They're still talking about, where's the meritless part? This is still talking about the idea of short selling. They're talking about taking major risks. Whatever, bro. Shut up on that. So one of the issues I see here is just from the way that this is being written, it would not surprise me if this person was paid in some way by somebody through Andrew Left to try and place an article like this. Like, that's not crazy. Again, I have absolutely nothing to justify that, and I don't think it's okay for people to immediately read something that they don't like and immediately just assume that they're a plant or they've been paid off. That's not healthy in my opinion. But I'm just looking at the way that they're writing the article so far. Like, they're talking about how much risk he's taking as if he's doing the market a giant service. And I'm not sure that makes a lot of sense to me. So I don't love this. But anyways, I just want to know where the meritless part is. Okay, so the other thing is it looks like John Tamny isn't even from Forbes, so he's just a contributor. Ill-gotten swagger from a federal government that has to never worry about giving its legal access to earnings? What? This just doesn't make any fucking sense to me. Joey is thinking exactly what I'm thinking. Joey says there is none. The word meritless doesn't occur in the entire text. That's exactly what I'm noticing. This is crazy. What a terrible article. And I'm sure John is probably a nice guy. I don't know John from a hole in the wall, but this is just not a good piece of work. So, because here's the deal. I don't care with this idea of short selling, right? Them talking about essentially the good components of it. Like, I don't care that they're talking about the risk that's involved. That's completely accurate, objectively true. I think that this accurate prices in the stock market enabled more informed allocation of investment capital. That's completely true, objectively true. This talks about the mechanism that they choose to go long or short. Again, objectively true, no problem. Think about the dangers. They're talking about essentially if this, like this here, translated left is going short shares, which there's not remotely a consensus. Again, that's okay. No problem with this. This is, I think, where it starts to turn. What this means for left and other short sellers, that they're wrong about which companies are in bad shape or in worse shape. They could be suddenly hurt. Essentially, short shares. Yep, that's okay. Stocks can rather attractive. Yep, that's okay. So this is still fine. High profile example, NVIDIA. Yep, that's fine. Please keep this in mind with the SEC suit against left top of mind, and that according to Wall Street Journal, accuses him of routinely making exaggerated or misleading statements about stocks to quickly profit on price moves caused by his reports. The same journal front page reports that the indictment returned by LA grand jury, essentially trading on his name and reputation, born of left's company. Left should be lionized. Yeah, that's fucking stupid. That's stupid. I understand, again, from an objective perspective, I understand the conclusion that they're trying to draw. What they're attempting to follow us or kind of walk us down from a thought process is that short selling is risky. Short selling benefits the market by creating more accurate prices. Totally cool. No issues so far. If they're wrong, again, that there's big risk. Okay, got that. The part that completely loses me is this, where they're essentially saying what they're trying to say is because they're speculating or making statements about something that doesn't have a consensus. That's what they're trying to draw here. Where is that word? This, or at least in worse shape than the consensus. And then this is no mistake. Where is it? Here's why the potential here. So this talks about a change in information. So like this is fine, right? Saying that essentially he's speculating on something that doesn't have a consensus and it's quick to change. And he's doing that in a way that would optimize market efficiency, right? So I understand that connection that they're trying to draw, but the problem is that this, I don't think, is being brought out in the correct context. This says routinely making exaggerated or misleading statements about stocks to quickly profit on price moves caused by his reports. They're trying to draw this into him making a statement about something that doesn't have a consensus so that there would be no objective or misleading statement if there's no consensus. But the problem is the rest of this indictment ties this to the background statements that he's saying in this context where he, literally, let's grab the indictment. It literally talks about it directly. And it's worth looking at because this is actually kind of frustrating, I have to be honest with you. Where is this document? I just looked at it yesterday. Is this it? Nope, that's Donald Trump. That's hilarious. That's hilarious. I literally typed in left indictment document and it was against Trump. That's hilarious. All right, Andrew left, maybe. Is this it? Andrew left. Here we go. So let's find this exact quote. Let's see what else is around this quote. Is this old? Am I looking at the right one? No, this is correct. Oh, I think they were pulling it from the article. Or is this just not searching this right? Let me make sure that this is actually... Yeah, okay. It's searching it right. Where is... Oh, because they're quoting the Wall Street Journal. Oh, I hate all of this. But let's see. There was something in here about Canadians, if I'm not mistaken, that I thought was pretty funny. Let's take a look. I don't think this is like this right here. Left message portfolio manager 1. I have a hot voice in cannabis. Let's take advantage of it. I don't know what this means. If any of you guys know what this means, I would love to, in like a court context or like in a document. What does this mean? What does mean in a court document? I see. So that means that it indicates Benoit Balls got it exactly right. It says, is used to indicate that a quoted material contains an error or unconventional spelling, grammar, or phrasing that has been transcribed exactly as it appears in the original source. So it's oh, I see. Oh, that's funny. That's my brain immediately already like turned that into advantage. That's actually hilarious. But I like that. So they're just making it very clear that homeboy misspelled shit in this case. Joey says essentially a typo. I don't think is necessarily a typo. I think that's part of it, but it's also if it's something just out of common parlance or something. That's at least what ChatGPT tells me. It says indicate that a quoted material contains an error or unconventional spelling, grammar, or phrasing. And that has been transcribed exactly as it appears in the original source. So they're saying, I know that this is not spelled right. I'm not dumb. He's dumb. To me, it seems, I don't know why you have to do that. To me, it just seems like the quotes do that inherently, but okay. I guess maybe paraphrase it, whatever. Anyways, back to this. Left instructed portfolio manager 1 not to overthink Citron Research next target company, stating, stop being such a pussy. It's okay to be wrong. Actually, I like that. That's, you know, if there's something that I've heard from, if there's something I've heard from left, I don't hate that. That's okay. That's like a completely fine statement. Left told portfolio manager 1, we can destroy Cron. Through a Cron short, we could get $2. Let's see. That same day, he sent a draft bullet points to the manager 1 with a short-term price target of 6. A draft included price target of 5. And then there is a report to left with target of 750. Later that day, he published a report, sent a tweet to his readers recommending that they sell Cron and that the true valuation of this company was $350 a share. Cron target price $350. Everything that is contaminated about the cannabis space, all hype with possible securities fraud. I didn't catch this before. The amount of times that this dude tries to hit other people with securities fraud is, it's not even crazy. It's like, I respect the audacity, bro. That is like, that's nuts. It's so devoid from reality. I can't even. This is crazy. I have to point you to the other example that I looked at this before. What made Keith Gill interesting was his authenticity. This time it feels different, appearing more like manipulation. Like This is crazy. Oh my God. An hour later, Left posted another tweet to his readers that he's going to appear on Fast Money to promote his recommendation. Andrew Left from Citron on CNBC to discuss why Cron is the most overhyped of all the pot stocks. This is nuts. This is nuts. During the interviewer repeatedly asked him if he holds a short position. What's relevant to people watching is, are you short the stock right now as you were at the beginning of the day? Took a small size of the position off, but I'm still extremely short the stock. The statement was materially false and misleading because by the time of that interview, Left exited more than 75% of his short exposure at well above 350, despite representing to his readers that was the true valuation of the company. Now, again, to his credit, it doesn't mean that you have to take a short to the intrinsic value to wherever the target is, right? Like to me, it would be unreasonable if the expectation was he's going to hold his short until it hits the price target. That I think is a little over the top. But here, the part that's crazy, that is materially false and misleading, is that he left the bulk of his position, whereas this took a small size position off today, but still extremely short the stock. That's not a small size. Again, like that is objectively false. Based on this, is 75% of the position. That's not a small size. So that's hilarious. That is absolutely hilarious. Left later bragged to Portfolio Manager 1 that he received 100 emails on Cron and not one of them was intelligent. Oh my God, this is so epic. I'm literally updating the title to this live session to Andrew Left Indictment review because this is just too funny. Brad says, let's go Theta Gang might go to the trial and wear a GameStop shirt. That would be hilarious. I would love that. Joey says, when did he do this? I want to see this on the chart. Okay, let's see. I think it was on the 29th, August 29th, 2018. So let's move this over here. Let's go to Cron. And then 2018. So we have to go back a minute. We have to go back even more minutes than this. Damn. We need daily though. So this is going to be kind of messy. Damn. I was going to say, am I that dumb and I didn't go back far enough again? All right, let's zoom this in a bunch so that we can actually see stuff. And this is 2018. August here, 29th here, right there. Oh, sorry. That was wrong. It's right here. I thought it corresponded beautifully with that one giant red day. That would have been even funnier, but it doesn't. So this is where it was, the 29th, right there. So yeah. That's epically funny. So this is where he had his big move in Cron. Alfonso says media interviews are not sworn testimony. It's freedom of speech. Lots of that going. Yeah, definitely. And I agree with you. And that's why I said even here, like I defend elements of Left here. Again, you guys will hear this continually from me where like, I have opinions on things, but I really seek to look at things as objectively as humanly possible. So even though based on this, my overall impression of Left is I'm not super favorable of him. I don't support a lot of this. But this, I think, potentially trying to hammer him for getting out of his position before it hit 350, I don't care for. And I stick up for Left on this tiny piece of this whole thing. But Alfonso, I think the problem here is that it not being sworn testimony is one thing, but there's a sense of duty depending on what your authority is and what your expertise is and the impact that it can have on other people's actions. So freedom of speech is one thing, and I agree with you. Obviously, I'm a staunch supporter of that with my military background. However, you can't have people in certain roles, in certain titles, in certain positions of presumed or even legitimate authority using speech to manipulate. And that is what I believe this is. Like, as I look at the breadth of this, it literally starts from this. I have a voice in cannabis. Let's take advantage of it. That's where this starts, which is, again, that tells me the intent behind the rest of this stuff. More importantly than that, the fact that he got out, BYND, that'll be a fun one to look at. But beyond that, the fact that he, again, like, this is a straight lie, and he knows what this does, and he knows what this does. So, for example, when people ask me, do you have a position on in GameStop? I never make it the focus of what I'm talking about, because I don't think people should overly care about my position in GameStop. However, I understand completely why people care. And it's exactly why during this interview, the interviewer was saying, do you have a short position in this? Because if you're coming onto a platform and you're saying Cron is a piece of shit and it should go to 3.5, and then they say, do you have a position on? And you're like, nah, I'm good. Well, it's like that, from a consumption standpoint, immediately makes me discount whatever they said. Because it's like, well, if you don't care enough to do it, or if you don't have any conviction in your own statement, then like, I don't care. So the entire purpose of him saying this is because he knows that element of the human psyche and the way that this information would be perceived. So that's why he didn't want to fully lie. And this is what liars do, is very frequently they'll try to find partial things that they can cling on to. And this is it, right? Took a small size position off. Well, 75% of the trade is objectively not small. That is the majority of the position. But he purposely framed it this way, literally to mislead the people on CNBC, so that, ergo, back to this, so that he can take advantage of his voice, his hot voice in cannabis. It's crazy. It's literally crazy. What is this section? Misrepresent and conceal their trading. Ooh, I love that. Let me take a second to run through some of your questions, and we'll get back to this for sure. But this is pretty hilarious to me. All right, let me see. Oh shit, I am super, super lost. Nick up above says, do you think there will be rotation into cybersecurity tickers? This is from the comment on CRWD. I wouldn't be surprised, but I don't know exactly what other alternatives. There's probably some people in the chat actually that would know better than me. CRWD alternatives. I don't know what other companies are fair alternatives. So it looks like PANW, looks like Symantec, Fortinet, Cisco, McAfee, Carbon Black. I don't know how good any of these alternatives are, but it does look like there are alternatives. Again, I don't know to what degree, but I think you just became Outlier supporter to make me say this. Fraggle Rocker. Thank you, Fraggle Rocker, for being an Outlier supporter. I appreciate very much, but that is a absolutely hilarious name. It looks like Fraggle Rocker has been slightly inebriated, so they're just showing some love, but they're waiting until they have their full mental faculties before getting into specific questions, which for sure, I totally get that and respect it. If you have any non-well-formed questions during your current state, they're also welcomed all the same. We welcome all questions. But let me see. Let me get back up. I'm just trying to get through some of the older questions so that I'm not leaving you guys fully hanging. We already did that. Reese Comedy, way up above. Reese Comedy says, did you start as an investor? I find myself straddling the line. My start in trading was actually not as an investor. I started doing something in, like, I was buying shares for like the first 2 months. And then I immediately started getting into other investments, other approaches, and getting into things like derivatives. So I moved into other stuff pretty fast, personally. But yeah, at least that's for me. Not sure if there's any follow-ons to that. Just let me know. Noah says, do you have a method for positions with a specific target in price? If you expect stock XYZ to go from 50 to 90, would you do 50 in the money? Yeah, okay, I see what you're saying. Yeah. I have a very specific series of strategies I would use for that. Most of them fall into this concept, this broad bucket called ratio diagonals. So I dropped a video in there for you, Noah, about ratio diagonals, but it'll go through that in depth for sure. So let's go through a couple more of these things. This was on 17 July. Left had long exposure in NVTA in both his personal account and Citron Capital. They stood to profit if the stock went up, of course. 17 July, he promoted NVTA, saying, on the long side, we're most excited about our position in NVTA. We continue to add our position at current levels, and we expect the stock to trade at 100 in the next 24 months. So far, I have no issue with any of this stuff. This is fine to me. Despite representing that they would continue to add to our position at current levels, and they believed it would go to 100, they sold shares of NVTA between 18 July and 25 at an average price of 24. This is the part that's complete bullshit. See, this is the thing. As I'm reading through this, I can find pockets of it where I'm like, yeah, okay, this is okay. I don't see anything wrong with this. And then this shit happens where it's like, how could you possibly be okay with this? This is madness. Between 25 and 30, Left discussed with his colleague his hope to get stock to 30. What can I put in a tweet to juice it? Holy shit. Again, this is one of those instances where this really, really, really seems like a slam dunk case. Now, a couple notes to be very clear. When you're looking at something like this, an indictment, it's designed to be written as damning. So, there's another side to this, and I personally would want to hear it, to hear the dude out. But based on what you read in the indictment, it's kind of like, damn, bro, this seems kind of cut and dry, I think. 31 July, he promoted NVTA, tweeting, certain it's on its way to 100, will continue to stay long until the stock hits at least 65, as we believe it's on the way to 100. They began selling the stock that very day at 27 or 28 and did not continue to stay long until the stock hit 65. Classic. Just fucking classic. Can't help but love that. That's hilarious. Joey says, how would you actually defend against these events? That's a great question, honestly. I think I'm not a lawyer, but I think from their perspective, they're probably going to focus on technicalities of like evidence collection, processing. That's my guess. I think that's probably going to be their main target, is how can they attack the way that it was processed. I don't think that they're going to spend a lot of time trying to go through these until they get specifically called out to go through these. So that's my best guess. Now, the fact that he pleaded not guilty is actually fascinating to me. I like Benzinga, but okay, cool. This is not all the way zoomed in. I'm going to leave this up for you guys to read. I just got to run to the bathroom real quick. I will BRB. All right, gang. How'd we do? So, fun fact. I typically would rather leave you guys with like a piece of news or something that you can watch. But when I did that yesterday, I actually ended up getting a copyright strike. So even the donations that people sent in, they take it all away. So we watched, I think it highlights the specific segment of the clip. It was like 2 minutes of a Jon Stewart clip, the one about GameStop. It was literally 2 minutes. And because that went off, they copyrighted and there's no ad revenue, which is whatever. But the part that I thought was crazy is they even take away like the people that chatted in donations, which I'm always super thankful for. They literally just took that shit. I was like, yo, you guys don't play. So anyways, that's why we had to go analog on this one. Let's see. I'm curious if there's anything about, I want to see if they have anything about what he said. Jotato says, I feel like if he's found guilty, penalties would depend on how cooperative he is. Of course, that is, you would better believe. The one thing that the court system is, or at least the judicial system, I should say, is fairly good at, it's kind of following trails. And I think in this case, I think in this case, it seems like a pretty good starting point. Now, Pam says, I'd plead not guilty too, but I'm not a piece of shit that would do that type of thing. Here. Cheers to that. Completely agree. Now, that being said, I do think it's important to also kind of remember some of the context here, though. If they charged him with 19 criminal counts, you kind of have to fight it because you have to look at it from his perspective. If I'm not sure what kind of plea deal they even would have remotely offered him, but the probability of him getting a better deal further down the line is much better than him taking a plea right out of the gate. They were probably going to scalp him. So if you go back to the original, where is it? In his original charging, it gave like an outline of the duration. I think this one was really good. Okay, I lied. This one was not really good. I looked at a bunch of them. Give me a break here. I don't think it was this. I don't like clicking New York Times, so I'm not going to click that one. This isn't it either. Who was it? It was... I thought it was Reuters. There we go. F44ZZ. Thank you, homie. They said it was like 235 years. Now, the problem, though, just to click. Oh, I think it was CNBC. Oh, no, it was Forbes. It was Forbes. I think it's this one. Yes, this one's it. Yeah, so this one, if convicted, 370 years. I think the problem with this, though, is that, again, like just from a technical perspective, the problem, Roaring Titties here. What's up? Shout out to you. But back to this piece of shit. So the 370 years most likely would be done concurrently. So I don't actually think that that sentence would be carried out sequentially. So I don't actually think it would be a full 370 years from my understanding, but I don't understand shit. So I'm just guessing here, but that is my guess. I don't think each one of those would be a discrete sequential sentence. I think it would be done in conjunction with the others. I forgot the actual term for that. What is that? Roaring Titty says they'll cut him a deal. I imagine so. And I don't actually think that that's bad, to be honest. I think when I look at something like this, again, let's switch gears from objective analysis, Eric, to opinionated, Eric. My opinion, not that anybody cares, but again, this is my opinion. This is my bias here. My opinion is like this dude going and spending 370 years in jail. Like, I just don't see how that benefits pretty much anybody. What I think would be a really cool sentence for somebody like him is he has to essentially give up all of his wealth, and he could never have more than like $1 million or something like that. That to me, like he would have to give up all of his properties, can't give it to his family, has to give it away. It has to all be gone. And the reason why I like that kind of thing, and the reason why I say something like $1 million, I know some people might think that I'm crazy for saying that, like that's a ton of money, but I look at it as it creates an incentive for somebody like him to at least maintain some level of productivity, but he would never be able to live the life that he would want to live. And you know that. So maybe $500,000. Fuck him. Million is a little high. So $500,000. Can't have total assets more than $500,000 or some shit like that. That's just an idea. But again, that's pure opinion. It doesn't mean anything. So Brad says won't be allowed to trade. Feds come. The whole point is to cut a deal. When they come, they don't lose. Lawyers will advise you. That is not accurate, though, unfortunately. I wish that was the case, Brad, but it's not. And we know it's not because Atlas trading case, this was hilarious. I'm trying to find like a good source for this. Well, I don't even want to put that person's name on here. I don't want to give them any press whatsoever. Long story short, there was another group that was pretty clearly charged with pump and dump in penny stocks. One of the reasons why I hate them. And most of them got off from a technicality. Brad says the feds. Yeah, I think the feds. I agree with you that the feds are coming with the idea of trying to cut a deal, and that's also why the Fed comes in so heavy. Brad says he has so many counts they have them. I don't actually think that matters as much as you think either. The reason for that is because when anybody is trying to come to you with a case, they're going to come as heavy as they can. It's literally to try and scare you. And it's also from a processing perspective. If I come at you with 17 or 18 things in total, one, you're more inclined to play ball with me because the risk of you getting hung up on a couple of them is pretty high. So there's two reasons. The first reason is, again, to kind of position and to get people to be more willing to cooperate, because when you dangle something, again, I don't think it's 370 years. I think it would be done concurrently, but still it's a shit ton of jail time, probably the rest of the dude's life. So when you dangle that in front of somebody's face, then you're like, fuck, like, how do I want to behave here? Now, my guess is, again, like, he has nothing really to lose unless they offered him a really sweet plea. The main reason I would imagine he would run not guilty is because he's probably looking at this, and I don't know how much prison they were putting in front of his face, but it was probably enough prison time that he was like, there's not even a benefit for me taking a plea deal here. I'm already going to go to jail, let's say it was going to be for the rest of his life, whatever it was. And when I say rest of his life, they might have done like 15 years, but I think the dude's like 54. So if you do 15 years at 54, you're getting out when you're what, like 70. So yeah, I mean, like, it's not necessarily enough of a deal where it's like, don't really care. F44ZZ says Martin Shkreli was convicted on 2 counts of security fraud, 1 count of conspiracy, and was sentenced to 7 and did like 4. Yeah, exactly. Yep. Well, the other thing though is that you have to remember is, again, like what Shkreli got convicted of is quite a bit different than this, and sentencing guidelines are pretty wide. So what Shkreli got isn't inherently like a correlation to what he would get for securities fraud. Securities fraud can run a really, really wide gamut. So at least that's my perspective. So I can see using it as some sort of benchmark, but I wouldn't overly weight it personally. Let's get back to this. And as always, if there's other stocks or other stuff that you guys want to come take a look at, let me know. We just kind of started going down this indictment rabbit hole, and I'm here for it because it's super interesting. But intermittently, I'm obviously going to keep answering questions or taking a look at other stuff that you guys want to take a peek at. So I'm happy to. Roku, 8 Jan 2019. Jotato says, nah, let's keep making fun of Andrew Left. I don't hate that. Brad says, I agree when it's a local DA, dealt with them. Feds have 98% conviction rate. The feds don't play. Again, that's the problem with the feds and what you're using there is part of that conviction rate is plea deals. So it's not actually conviction in trial. That's just getting a conviction on a presented case. And I actually don't know if it's that high still. Just in case you guys didn't know, my undergrad was criminal justice and statistics. So I'm not approaching all this from completely sideways perspective, but let me see. Current federal prosecutor conviction rate. Andrew says, please look at RK May 16th, 11 a.m. tweet. Yeah, let's take a look. To be clear, I'm not good at the tweet meme stuff. It's just because I literally don't know anything about it. Oh, God. Here we go. Oh. My sciatica is still completely torched, so sitting and standing is terrible. We just need 1 second. There we go. It gets a like shooting pain for a second, and then it goes away. All right, we're back at it. Sorry about that. Okay, so according to ChatGPT in 2022, it says the conviction rate for federal criminal defendants is 99.6%, resulting in conviction. Specifically, only 0.4% of federal defendants went to trial and were acquitted, which makes a ton of sense. 1.9% went to trial and were found guilty. Most defendants, 89.5%, pleaded guilty. 8.2% had their trials dismissed before, or had their cases dismissed before trial, which sounds about right. So yeah, I agree with you. Like when the feds are coming with something like this, they're typically not coming with something that's half-baked. And I imagine he has a difficult path ahead of him, is my guess. But yeah. Brad says, I think we're on the same page. Completely agree. I just like looking at those kinds of numbers, to be honest. It's fun for me. This is one of the reasons why I like the market so much, is because even in this conversation, I'm learning a little bit more about legal parlance. And then from legal parlance, I'm learning about federal conviction rates, literally all through this process of looking at the stock market. Like that's one of the reasons why I love the market. It's such a fun way to learn about the world. All right, let me grab RK tweet. RK tweet. Oh, where's my Twitter? You boys got a Twitter. Listen, relax. I have a Twitter. I've had a Twitter for a long time, but I never really do anything with it because I don't like social media. That's actually, if any of you guys know like a social media manager, I would love to hire one. because I hate social media, but I know it's important for growing like the platform. And you say I'm supposed to look at May 16th. Let's go to May 16th. Okay, so we're going back to the archives. May 17th, May 17th, May 17th. Yo, he was busy on the 17th. Holy shit. Oh my God. He tweeted so much on the 17th. This is crazy. Okay, here we go. 16th. Well, okay, well, I didn't realize this, but you're going to have to tell me which one on the 16th, because there's 9 million tweets on the 16th. Which one are you talking about? This is like the least descriptive rabbit hole. No, there was a more least descriptive rabbit hole. Actually, let's give a quick shout out to Unknown Reducer. In case you guys didn't know, yesterday, Unknown Reducer sent me down a completely random rabbit hole yesterday looking at some shit that didn't exist. So don't want anybody to forget about that. But Joe Tato says he said 11 and that. Yeah, you have to click into it. So you guys want me to click into every single one of these before I find the correct one? Here we go. Maybe this one's 11 a.m. It's a man and a woman. Andrew said, I pasted the link. Where's it at? Yo, YouTube is no joke. They fucking hit me with that copyright infringement for that video yesterday. And they snatched up that link because it's not in here. They do that all the time. They do not mess with that stuff. Roaring Titty says YouTube chat doesn't let links. Yeah, that's hilarious. Okay, so you said it's a guy and a girl. So let's find a guy and a girl. If I was, hold on, maybe I could figure this out. If I was Roaring Kitty, what time would my first tweet be? I don't know where he lives, but I'm going to guess that this one is like 7 a.m., 7:15 a.m., 7:30 a.m. So these are all scheduled. 7:45, 8:15, 9:15, 10:45, 11. All right, here we go. I can't play this. It's from a movie. I'm immediately going to get fucking kicked off and copyright struck. Andrew says, click my link. Andrew, I don't know if I told you this already, but we can't see the link. I think Roaring Titty made that about as clear as humanly possible for you. I'm tired of Roaring Titty not getting the respect Roaring Titty deserves with that kind of name, because she already explained it earlier. Crystal clear, YouTube chat doesn't let links. Andrew says, mad respect. Thank you. We have mad respect for Roaring Titty. Day Swag. Yeah, you got to put a little bit of respect on Roaring Titty's name. Okay, so now if the video's edited, which I think it is, should be fine, right? I don't think so, because then it kind of belongs to somebody else. I am super, super, super sus. Colin says the man is a bad back and no patience. That's it. That's exactly it. So we just watched this one. It's not this one. This is 16 May at 11 a.m. So which one is it then? Here's my fucking, I knew it. I fucking knew that I was going to be sent down some random ass rabbit hole. You guys do this to me every stream. As I was figuring out if I was going to do this stream, I was sitting here thinking, man, it'll be fun. Look at the market, talk about whatever comes up, love hanging out with you guys. And then part of my brain is just like, but somebody's going to send you down some random ass path. And here we are. It's a blonde woman and a dark-haired man. All right, let's see. Blonde woman, that's kind of blonde, I think. What color? That's not a dark-haired man. That's kind of white. That's white hair, so that's not it. Maybe this one. Dark-haired man, that's not a blonde woman. Brown-haired woman. This is crazy. I literally am a grown adult sitting here looking through somebody's fucking Twitter page with the instructions of it's a blonde woman and dark-haired man, And then I got somebody else saying it starts with a briefcase. And I'm literally looking through videos trying to decipher people's fucking hair colors. You guys have no idea how much I obviously love you, that I'm sitting here going through this madness. I cannot believe I'm doing this right now. That's not it. I see no briefcase yet. Still no briefcase. I see Kill Bill. If it's Kill Bill, I'm going to kill you guys, because Kill Bill is about as the simplest reference or Saw. Okay, go back. Go two back. This one? This one. Michael Scott? Not Michael Scott. Go up 3. No, I can't go up 3 now. I have to go slow. Go up 1 more. This one. Oh, we made it. Oh, shout out to us. Let's all just take a minute and well, you know what you guys could have done for me? Is you guys could have said 1 video above the red PT Cruiser with Michael J. Scott in it. Like, maybe we could have done something simpler. Or below the upside down twerking lady, or below the subway. We literally could have had some instructions going on here. Instead, I got a fucking blonde-haired lady, which I haven't seen yet. Here we go. Okay, so right now I see a briefcase and it says RK Gill. So love this. Flies open. Papers. We're overlooking a town. That's a G. Oh, this is like a Goosebumps thing. Okay, that looked like... That's hilarious. So there is Cohen changing into... Well, he doesn't really look like a chick. But it changed from a chick to him. Then there's a dog with GameStop crossing over the dog with snake eyes, yellow snake eyes, bear beware. You're in for a scare. Okay. Okay. Okay, we made it through. I think we've got the details. So talk to me. What is whoever put this in front of my desk originally? What are we looking for here? Who was this? Cedric says Chewy because the dog cat eyes. I don't know. What kind of... Reese says, we just wanted you to see. Well, I saw it. Noah says, briefcases swaps going public. Oh, you guys are breaking my balls right now. All right, 1 sec. I got to get the tinfoil hat. We're not moving quick. Oh, you guys straight up. Maybe... fuck. All right. Tinfoil hat. God, that's painful. The immediate sitting is just not good. Let me see if there's a way for me. Give me 1 sec. And... Whoa. Didn't mean to do that. Give me 1 sec. Hang on, gang. No, that's not going to do. We have to figure this out. Give me a second here. It's more difficult than it looks, especially when you don't know what you're doing. All right, so let me paste that in. Okay, this is a good start. We'll turn that one off. We'll squish me down into the corner, just like before. What do you guys think? Pretty good? Are we ready to get into this a little bit? I guess we can take like a bunch off the right-hand side so I'm not too much into the screen. We'll call it like 150 pixels. We'll do 150 pixels from the left. Maybe 200 pixels from the left. Yeah, there we go. 200 from that side. All right. I think we have it here. Okay. So, was there something I was supposed to pick up from this now that I'm here? I literally am dressed for the occasion. I'm ready to tinfoil hat this shit. So, Andrew is letting me know that Cohen updated his Twitter to be a woman. I think we all know that. Even I know that. So coming at me with this old news as if I don't know that. Unbelievable. Yep. Because if I remember correctly, it started with just she, her, hers. Then it had unemployable. And then it had this. No, I don't think this was today. I thought it was before today. I thought for sure that this happened a little bit earlier. I don't know. All the days kind of blend together, TBH. So I don't exactly know, but yeah. Okay. So then talk to me. What's the connection here? You guys think that Roaring Kitty forecasted Keith Gill's transition to a woman here? Is this it? Andrew says it appears RK is working with Cohen. I don't think so. TBH. So here's the reason why I don't think so. I'm sure that they would like to coordinate with one another, but I think the problem is for the safety of the organization and like his standing as a CEO. I don't think they are. Because if they were, then all of a sudden he can start getting roped into all these different kinds of stock market manipulation claims and shit like that. So my guess is that these guys are kind of having some fun online. And the other thing I've been noticing anyways from Cohen is that he's just being a troll, right? He's just being goofy. So like this. I think he did this. I think he said Trump 2024 just to fucking get under people's skin. And then he did a bunch of Trump things, seeing how pissed off I'm sure people got to that. And then he's being cheeky with Kamala 26. Like, to me, this just looks like he's just fucking around. That's what I'm gathering from this personally. Roaring Titty, what's your Twitter? So I can tag. You know what my Twitter is. Come on, man. I literally have the same handle in everything to make it easy to find me. Although we are slowly starting to rebrand, to be honest, like Outlier Trading as compared to ES Invests. I don't necessarily want it to be about me, but here you go. That's hilarious that I can post links, but you guys can't. The disrespect. It's kind of unbelievable. I believe. I dislike that. You spelled it wrong. Of course, you probably used like a fucking K or some shit. Everybody, oh, I'm sorry, Roaring Titty. My bad. I had somebody yesterday spell my name with a C, and I started taking that on you. That's not right. Sorry, Roaring Titty. I apologize. That was misdirected. Alfonso says Cohen is Canadian. He can't even vote in U.S. elections. That's actually hilarious. Okay, cool. Roaring Titty tagged me in something. So let's see what I got. Oh, this. Man, that's super fast. We're going to have to go through this slow. All right. Let's see. Devin says, how do you trade earnings gaps? Yeah, let's take a look at that. I'm going to run through this really quick, and then we'll take a look at some earnings gaps. Love that. Is there a way to slow this down? Because this is like super fast. Okay, cool. I typically listen to stuff at 2 times speed, but this is like really fast. We got to slow it down even more. Wait, why is this backwards? You have to watch it backwards? Do we have to start from here? Thor, leave your foot alone. My dog's just sitting there literally chewing his foot like a fucking psychopath. No, just start it from the beginning. Okay, got it. And play it at regular speed. Got it. Okay, sorry. I told you guys I'm not good at the meme stuff. I don't know all the tricks. All right, here we go. Of course. Now it's completely landlocked. All right, let's refresh. Give it a blank slate. There it goes. I see. That's hilarious. Okay, so I actually have to hear what he's saying here. So
I had thought that at that time, but investment theses, they evolve over time. As the fundamental events change over time, it's important to update theses accordingly.
I love that so much. I literally love that so much. That is so funny. That's absolutely epic. So this was back on 15 May. So my guess is that there's probably been like underlying jokes and stuff that they've been picking up, you know, from one another. Because I mean, from a male perspective, again, going pure opinion for this component, it's, and I don't know from a female perspective either. Maybe you guys agree as well. But I think a lot of dudes, we find the sex changing stuff and identification stuff to be slightly confusing. I don't want to say from a male perspective, because I know other dudes feel differently about different elements of it. So maybe it's just my own perspective, not to tie it to any sort of class. But yeah, to me, that seems part of the joke here, at least from what I'm seeing from like Cohen and stuff. I don't know why he's decided to go this route and just, you know, for this point to do this. Roaring Titty says, I think they're just trolling each other, not in cahoots, but talking back and forth through memes. Completely agree. You know that that's part of this. Yeah, I absolutely agree with that wholeheartedly. Let me pivot really quick and then we'll get back to the case. But I want to talk to who sent that question in. Here we go. Devin says, how do you trade earnings gaps? It's a great question because we're going through earnings right now. So I think that this is actually very topical to the current market. So Devin, give me a little more context here. Are you talking from the perspective of you want to trade through earnings, or if you're talking from the perspective of post earnings? Because those two things for me are actually really, really different in terms of how I will approach it. So post earnings. Yeah. So specifically for post earnings, I'm looking to capture a really well documented phenomenon called post earnings announcement drift. And it moves in different directions. You can access this paper here, and it'll walk you through some of the baseline concepts. And then I have a video about how I trade earnings, which is here. And you can do a few things. Rapture says just play the IV flush. That's one part of it. I actually would argue, though, that you're missing a lot of the opportunity driven by earnings if that's the only component you're trading. There's no reason just to trade that, in my opinion. So there's certain criteria that kind of breaks out what, let me see if I can just grab it for you guys, like a quick synopsis and put it in the chat. What are the primary traits of the PED effect. So for those that don't know, PED is post earnings announcement drift. So I think this one is too long. So the message I just dropped into ChatGPT was too long. I normally don't have to deal with the length issue. So let me delete a bunch of stuff and then see if it makes it better. Nope, still too long. I didn't realize that this would actually be so touchy. I gotta be honest with you. I thought ChatGPT would be able to hold much more data. So let me just get rid of all this. All right, let's see. That one should be good. It is. Okay, so summarize the traits of PED. So anyways, for those that don't know, PED is post earnings announcement drift. And there are certain traits that you want to see in order to identify stocks that tend to exhibit PED. So I'm trying to grab from this. You can get it from this study. I'm trying to grab it for you for like a Cliff Notes version. What EPS behavior and stock price behavior is a precursor to PED? All right. So these are like the main components. Alfonso says ChatGPT can read single page documents that you screenshot as an image. Yeah, that's super cool. I like that it can do that. I was just trying to copy this whole thing in because what I was hoping to do is give you like a really quick Cliff Notes version that I could paste into the chat here. So like this. So there's a few really important. God, that's so annoying. So I can't post like anything. The character limit, I didn't realize, is super, super short. I'll drop it in the Discord for you guys, just so that you have it for reference, and you guys will all be able to access it there. Shit, it's too long for that too. I just have to trim some of it out. Okay, so volume is where I left off. Volume, this here. Cool. All right, so I dropped it in the Discord for you guys, but here's the synopsis. You need to see a earnings surprise, either upside or downside. It says the magnitude of earnings plays a crucial role. Larger deviations than actual tend to result in more pronounced PED, which is correct, obviously. Frequency of surprises. Companies that consistently beat or miss expectations over multiple quarters are more likely to exhibit PED. So that's another component. So if you're taking notes at home, I've given you two discrete components that you have to pay attention to so far for PED. One, there needs to be an earnings surprise. And you'll notice that I'm actually talking about it agnostic of direction. I'm talking about it in the context of standard behavior. The reason why that matters is because you can actually trade PED, post earnings announcement drift, to the upside or to the downside, technically speaking. So it's an interesting opportunity. But yeah, anyways, so that's the first component that matters here. Now, the second component, I actually think I have another thing that I can show you guys if you want that summarizes out pretty neatly the specific studies that you can run. And I can show you a scan that I use. Maybe that's even easier still, because the scan that I like to use looks to isolate the movement of most likely companies. So again, it's not a sure thing by any degree because it's a general tendency. But first two, we need earnings surprise, upside, downside. that deviates significantly. So you can scan by larger deviations. Second thing is magnitude of surprises. So the larger deviation, the better. Third thing that we talked about is how consistently it occurs, the frequency of surprising. The unexpected component of earnings is what drives the drift in price. Alfonso says, what I meant is that ChatGPT could read it and then explain it to you like you're a 5-year-old who only eats crayons. Oh, yeah. Well, yeah, for those that need that, that's there. I mean, I'm really familiar with PED. I was just using ChatGPT to try to summarize it very quickly for you guys because there's technically a lot that goes into it. Now, from my own notes, I'll give you guys a few other things. So, companies with largest increase or decrease in earnings during the year also had the largest increase or decrease in stock price. However, they also found that stock prices of those companies with the largest in earnings continued to rise or fall the next 3 months. That's really important, that 3-month component. So, literature consistently indicates, these are just my own notes. Literature consistently indicates firms with earnings surprise in the top 10%, so the top decile, or the top 20%, the top quintile, outperform the market. And firms with earnings in the bottom 10 or 20 consistently underperform the market. So you can look for those kinds of traits in your post-earnings announcement style plays. Now, for me, to get to the question itself, what I like to do in post-earnings announcement drift plays is I like to filter by things that look like they are exhibiting post-earnings announcement drift. So there's different ways to set it up. So this is looking for stuff that had earnings within 2 days, that had a certain price change percentage already, and nothing is matching it right now, which is not necessarily too heavy. So let's find something that looks like even a remotely good example for you guys. Maybe, how did BP do? Terribly. So that is not what I would want to use. Maybe something from last week. So right now I'm just looking for something to walk through an example with you. Now, another trait that you should be aware of with respect to PED is that it actually contracts with larger companies. Large cap companies tend to have better information discreteness. Also, shout out to us. There's fucking almost 80 people in here learning about reading indictment cases, looking at memes with Roaring Kitty, who doesn't love that, learning about post-earnings announcement drift. How cool is that? Massive, massive fan. Shout out to you guys. All right, so let's get back to finding something that looks even reasonable. So just so you know what I'm looking for manually right now, instead of reconfiguring the search, is I'm just looking for stuff that had large EPS beats. So NOC is interesting. So let's see real quick. I'm just trying to find something that even looks remotely attractive to me, because you also need a gap of some sort. Maybe for this, I can just make this a little easier. So let's look for something that has had earnings in the last 10 days. And let's say we want something, open that up just a little bit to see if there's anything that hits our scan. Still nothing. That's annoying. I essentially just need to create a slightly looser version of the scan. Create all right. Let me see. I just want to find something that has had like pretty big earnings beat. AMKR. Let's see. Maybe AMKR. I think we can come in from like the 10-year daily chart. That's a little excessive, isn't it? And then in the meantime, meantime, while that's trying to load, let me try a slightly different version of this scan. Why is this not coming up? Did I mess up the ticker? Okay, yeah, this is actually a good example for potentially negative P downside. So for something like this, my approach would actually be pretty simple. I would look at trading a ratio put diagonal or short calls, depending on how much of a move I think I might see in the product. With IV being so high, I would likely tend towards selling strategies here. The downside with using sales strategies is you're going to cap profit potential. So for example, if we structure this to be like a short call, the maximum amount of money you're going to get is whatever the value of the premium received is. So let's take a look in this case. And the options look terrible, by the way. I don't like these options. They're super liquid. But anyways, let's say that we want to short something like this. Yeah, see, I hate that. The 34 delta or the 34 strike calls at a 31 delta, they're like 60 cents wide. Like I really don't like how wide that is. But let's just pretend this was more liquid, kind of like these or something. I would look to sell these and you might collect, you know, like 80 cents, something like that, maybe 90 cents. So I don't hate the trade. I would also personally wait to see what it does tomorrow. Like I would want to know, is it going to start basing out a little bit? Or I wouldn't expect there to be some sort of really heavy short-term mean reversion though. So I would trade it to the downside probably with short options personally. Now, if we're trading something more to the upside drift, that can be really cool and powerful actually. So like even this previous earnings, even though it was a down day, it was still, I'm guessing, yeah, it was still a massive beat, right? It came in, it was estimated at 10 cents, came in at 24 cents. So a massive beat and it gapped up, right? So this is a big initial post move. So even though it snapped back into reality the following day, if you look at its performance over the following quarter, it had a killer performance. So let's say that you had entered in even at the high point. Let's say that you got in right at the open at 35. Also, there's 69 of us. Giggity. Shout out to us. So let's say you got in at 35 and it didn't look like it was working too great for a while, but then it really started to pick up and this still would have made money. It came up to a high of 44.86 over the next quarter. So even if you use the day before the prior earnings, right over here, you still would have made money. So I like stuff like this. And I think there's like the post earnings move plays. I tend to try to play them on the day of the release. So my personal preference is those are the days that I will be closer to the market open and I will try to follow the primary direction that I see us moving in. Now, I normally like, let's take a look for an example. Let's take a look at today and we'll use like a 1 day, 5 minute chart. So you can see today on the open, it started selling off. It didn't really catch a bid until the end of the day, right? So this was a fairly one directional size move. So if we take a look at its prior earnings, which was the 29th. I assume this is after the close. Yeah. So it came through on the 30th. So if we take a look at the 30th, let's go back in time really quick. Here. And that was 30 April. 30 April. And then actually let's go to 31 or let's go to the 1st of May. So what I'm doing is I'm going to let us take a look at what it did in this closer time frame. So then let's use a 1 day, 5 minute. So you can see more often than not, when you'll see these things hit the high after an earnings release, it'll be after the open, and then there will be a general tenor of direction that develops. So following something like this broader trend becomes much easier, in my opinion. So that's the idea here. So the way that I would play something like this is on the day, you could buy or sell options, and then you can play stuff over the following quarter if you're so inclined to play the remainder of the drift. But that's the gist. And then, like I said, that video that I shot up above goes through the other ways that I think about trading post-earnings announcement drift. So, Devin, let me know if that answers your question. And Lascivio says, I know you moved on, but back where you're reading the indictment, I'm surprised you think people read legal documents. Most people have very low information readers unless they're fans. Yeah. Well, that's kind of the other thing is I think it's really important at least to be like, if you want to be a successful trader, you have to get really used to doing this kind of stuff. This is actually the cool part of being able to do it on like a YouTube live session with you guys, is because this is all shit that I do anyways. Now, when I do it on a YouTube live session, I just talk about it a little bit more and share some of the thought process behind what I'm doing. But the general idea here is to kind of get into the detail of things, because in my opinion, that's kind of where the money stands to be made. I also realize I need to order my dinner, which I haven't gotten around to yet. I'm gonna do Mexican. I'll grab a carne asada burrito and a chicken quesadilla. That's what sounds good. I have like an entire suite of different kinds of hot sauces. So let me launch this off so I can get fed. Cool. So dinner will be here in like a half hour. Chewy says, I really enjoy the whole process with water. Yeah. Yeah. I think, well, especially something like playing earnings and whatnot, I think there's a ton of opportunity. And then I just got to let the pup out super fast. I'm just going to open the door for him. Oh, oh, all right. We'll keep it on the standing here. Joey says calls on Dash. I'm pretty sure like I single-handedly support Dash. That I DoorDash essentially every single day. I like cooking too, but it's just time consuming, right? Like right now, if I wanted to cook myself dinner, I would have to be in there cooking and not here hanging out with you guys. So yeah, a little bit of give and take. But yeah, I think especially when you're looking at stuff like, that's one of the things I've been surprised with the ape community is I actually find that they're quite well read on this stuff. So my guess is that there's probably quite a few people running through this stock and like really learning about it, I think. Tommy says steak cook up quickly. I actually have a bunch of fillets in there from a buddy of mine that runs a cow farm. I actually invested in his farm, and he'll send me some of the slaughter steaks. They do like dairy farm. It's all grass fed, open range bullshit, whatever the fucking crunchy stuff is. But as the cows get old, obviously they'll slaughter them, but they don't sell it to stores. They send it to people like me that invest in the farm, which is really cool. Alfonso says, I saw Taco Bells in Thailand, but I live in Mexico and not a single Taco Bell in this entire country. That's really interesting. That's actually really, really interesting. All right. What else do we want to look at? We have like another 20, 30 minutes or so before my dinner gets here. If there's anything else that you guys want to look at, throw it in the chat. In the meantime, I'll run you through some of this stuff. I guess one of the things I could talk about really quick before we get back into this case is some of what happened today on the 0 DTEs. So for those that don't know, I run 0 DTEs in SPX like pretty regularly. And this is a smaller part of my book, but it tends to be a pretty effective trade for me. Now, there's a lot of details and nuance to what I do that I'm not necessarily going to bore most of you guys with in this video. I imagine a lot of you won't really care about it, which is totally fine. The one thing I want to highlight, though, for those that do trade stuff like this, I just want to reiterate one of the points that I've made previously. And the point is, pretty regularly, I find that when SPX is making these larger ADR moves, so what I do is I take a look at stuff like what's the ADR today, what's the ADR over slightly longer range timeframes, which I realize I don't need that 14-day ADR anymore. I like to use like a today and then a 5-day is actually a little bit better. Yeah. So the reason why I like to use these, though, is because it gives me quite a bit of context around the underlying itself. And when I'm trading stuff like 0 DTEs, I want to see if I'm potentially stepping in front of any sort of landmines, anything that can cause me problems. Now, there's a bunch of different time frames that I personally target when I'm entering these trades. I will share a video that I literally just put out that I share actually a decent bit of the research that I start with from a fundamental standpoint in terms of finding optimal entry times, which shifts, by the way. It's not static. However, the general idea here is I like to enter towards the end of the day. A lot of this early vol bleeds out, but vol really starts to accelerate its decay. And so does theta towards the end of the day. And the important part I want to highlight for you guys is typically when I'm looking to enter, I don't mind giving the trade some room to move, but I have to manage it. And I continually notice this right here. It's not every day. It didn't happen yesterday, but this does happen semi-regularly enough that it causes problems. So and you can see what happened yesterday. We started selling off into the close. The reason why this matters is because if you're using a rules-based approach, for me, I was actually on a chat in the Discord with our friend Tom. I don't know if he's on here. He's been quiet, if so. But I was chatting with Tom a little bit in the Discord just about some other stuff. And as we were doing that, it had this big, massive, giant red candle up. And then it just came right back down. And as it was happening, I told Tom, I was like, I just got stopped out. And I have a feeling it will fall right back into range. And that's exactly what happened. Now, what I'm doing here, though, is tightening the stops that I'm allowing on the trade on a volatility-based threshold, because here's what can happen towards the end of the day. If you're using some sort of resting stop order for your entire position, there's a really nasty thing that can happen where you're trying to fill both a call and put at the end of the day, and there might not be a market for it. So you can get stopped out at a terrible, terrible time if you wait too close until the end of the day and then you get filled on a stop. So anyways, today's 0 DTE lesson for traders is twofold. One, I'm still finding the later entries to work well. And two, I'm still finding managing it sometime before the last 20 minutes to work well. Now, for me, in terms of that management, like I said, I'm using something like adjusting my stops, which is what I did yesterday as well. We just didn't see as big of a move that ended up stopping me out. Yesterday, I didn't get stopped. Today, I did. But I was stopped out at a profit as I was tightening things up. So that's just a little Cliff Notes version on some of the other stuff that I'm working on. Zeros are still doing really well. And I'm also finding that earnings has been very much intact. So earnings has been going well. All right, back to this. Noah says, I sent you swap data. Cool. Yeah, I'll take a look at it. For swaps, here's the problem I see with swaps. And this is what I was talking with Newton about. I don't know how much they matter. I know a lot of people will take a look at they'll take a look at different things and weight them differently, as we should. But the problem with swaps, in my opinion, is that they literally can just be changed or extended at any point in time. So swaps coming due doesn't inherently really mean anything for us, unfortunately, because what matters is if a swap expires and that swap is tied to an underlying, right? The actual delivery of an underlying. If that's not the case, then it doesn't actually matter quite that much. Dark Jen says, love the rebranding. Outliers is very marketable. Yeah, well, I've always called us the outlier community. I've always been obsessed with what I call the outlier mindset and outlier concept. That's always been kind of like the front of the community branding and whatnot. I'm just slowly changing the name of shit from ES Invests to that. And it's just because I think it's more representative of the group as a whole. And I also don't really want me to be like the sole focus of stuff. The reason why I started with that is just because I want to specifically call out when I'm using something like my own thought process towards things and stuff, to make sure that people understand that there's bias inherent with it. But yeah, I've always considered myself in the pursuit of kind of outlier performance, and it's exactly why I call us the outlier community. And it's because the whole idea is to put people around one another with the mindset of outperformance. And I really believe that we are a reflection of what we choose to surround ourselves with. And I believe that who you choose to surround yourself with has a pretty significant impact on your development and your behavior as like a human being. So I've always found a lot of success moving better around people who I would consider to be higher performing people. So yeah, I have much love for that concept, and it's something I try to share with people regularly. It's actually why I try to remind people to like even have better benchmarks, right? There's a reason why I continue to bring the outlier concept in front of people's face. It's why I insist on us calling ourselves in our community outliers, because it forces a reconsideration of what the comparison is. This really all stems from, actually, let me grab this for you guys so that you can see. I can show you exactly. So the whole idea behind this is this. It's the majority of people find themselves in this kind of scenario. And the idea is, if you want something other than this, hopefully to the positive side, meaning doing better, you literally cannot be average, and you cannot compare yourself to average, because you're trying to do stuff that average is not doing. So it requires a completely different benchmark, a completely different focus. And that's the idea behind the outlier concept. When I hear people make the benchmark of like, oh, well, I do better than the majority of people, or I do better than the average person, I'm always sitting there thinking like, who gives a fuck how you do against the average person? Who cares at all? Average is not something that I aspire to pretty much in any way. So the whole idea behind that is to try to help people with a shift in mindset. That's really the ultimate idea there. So yeah, I'm glad you picked up on that. It's something that obviously I care quite a lot about. All right, let's take a look at a little bit more of this. And then again, if there's any lingering questions or anything that you guys want to hit, let me know. But otherwise, we'll get ready to wrap up in a few. Let's see. Cron, we already did. I want to see, this is in media interviews. Let's take a look at defendants traded Citron's research That's interesting. Chewy says wrestling coach would respond to how's it going with better than average. That's awesome. I love that. That's so fun. Dizzy said hearing from certain GME groups chats since you value GME at 10. Oh God. Said swaps don't matter and Roaring Kitty sold his GME. People are less trusting of you, but they're also paranoid bunch. First of all, I didn't value GameStop at 10. So anybody that thinks or is saying that I valued GameStop at 10 is, again, they're simply not listening. And I think that's in reference to the question from yesterday. And the question from yesterday is like, where do I think the floor is? And again, I just gave an objective answer, which is using the intrinsic value of the stock. So that's not even like, that's not an opinion. That's a very fair way to calculate the parameters of something, which is where is the intrinsic value of the stock. So yeah, I definitely didn't say that it's worth 10 or that I think it's at 10. I actually said I think the next congestion zone is around 21. But again, like congestion is wherever the stock goes is where it goes. The next point on there is saying swaps don't matter. Again, that's if somebody says that, it means that they're not listening, because I didn't say they don't matter. It says I don't know if they matter. So they absolutely can matter. And I gave an example of where they can matter. So an example of where a swap matters quite a lot, actually, is if we have a scenario where the underlying swap is coming up on expiration, it pertains to the delivery of the underlying and it's taken into expiration, just like an option. Like that matters. And I said that. Again, I have no problem if people don't agree with what I say. That's totally okay, right? We should have the ability to have logical conversations, but it becomes impossible to do that if people don't listen to the nuance of what's said, right? So again, revisiting that, never said swaps don't matter. I simply said I don't know if they matter. And I don't think a lot of them matter as much as we think they might. And it's because, think of it this way, the thesis here is that those swaps entered the equation back here in 2010. And we know a lot of those swaps still exist. So they're derivatives contracts. So the terms of the contract can be renegotiated and changed. Noah says swaps have a column that determines if it's eligible for extension and early termination. Exactly. So that's the important component, exactly as Noah is digging into. And that's something Newton was telling me that Noah has been digging into, which is really, really important research, by the way, is the frequency of which ones are able to be extended. So actually, let me take a look really quick, because I think you said you shot the data over. So I'll literally download it super fast and we can take a look at these swaps. I just want to take a look at the expiration cycle on them. And then the third part about Roaring Kitty sold his GME position. Again, I never said he did. I simply said that it looks very probable that he did. And again, I still stand on business there. I'm not saying that to hurt anybody's feelings or because I want to put anybody down or anything like that. But the fact of the matter is when we look at Roaring Kitty's positions, right? We did this yesterday. So let's take a look at this here. This here. So with something like his last position update, which happened on 13 June, he had $268 million. We know that he filed a 13G that was worth at least $225 million in Chewy. So anybody that would suggest that he couldn't have sold his GME to get that position is like, to me, it's just ignorance. It's wanting to believe something else so bad that we're just choosing and willingly to ignore a very probable scenario. And I will reiterate this point, since apparently some people don't listen well. I don't know that he sold his GameStop. There's a reality, and I've said this a million times, that he has another account that has a shit ton of money in it. And there's a reality where he could have moved that money from another account into this account or another account and put the position on. Like that's all entirely possible. Now, there's, again, small details that lead me to personally believe that the probabilistic scenario is that he sold his GameStop shares. And I'm not saying that he's abandoning GameStop or anything like that, but my guess is that he's doing something. I can't tell exactly what, but here's why. If we take a look at this stream, which Roaring Kitty, being the homie he is, he hasn't copyright struck me for watching his stuff. But listen to this. Listen to this. Dizzy said the Fidelity account is reportedly his wife's that he manages. It could be his wife's. The other thing I would imagine from a Fidelity account, which I also told you guys, is it could be retirement accounts. He worked in finance. I think he was an insurance component. So like a lot of people will use Fidelity to service a 401k program. So that's also a very likely scenario. But anyways, this is the part that I think is important to listen into.
Best. So I'm always, there you go. All right. Cheers.
And every time I got to drink with them. Cheers.
Cheers. I got it up there. So those are my only positions. You know, as you know about me, I'll take, it's a true YOLO again, I suppose, depending on, I know there's some cash there. That's what I mean. It depends on your positions, but,
so that's what he's saying. Like, these are my positions. This, and in this same block, he says that this is his only account. So again, like, I believe him. I'm literally just taking him at his word. So in that context, if he tells me in the live stream, and I'm just going to take him at face value, that those are his positions at that time, unless you count cash as a position, that this is his only account, because he was addressing the news articles he was seeing, saying that and suggesting that he has other accounts. So he talks about that explicitly, and he said, "This is my only account." So I'm just taking that at face value. Now, Alfonso says, "What Fidelity account? All I ever saw was the bookmark for his research." Yeah, and I don't know anything about the other account. But anyways, going back all the way up to this, to Dizzy's comment, people saying that they're less trusting of me. That's okay, right? Like, I think people should be skeptical in general. There's nothing wrong with that. But the thing I would always encourage people is to just try to follow information and data. My general goal in doing all of this stuff is to just try and help pull out data points for people to look at. And even in those 3 points, Dizzy, that you were talking about, you know, saying that that I valued GameStop at 10. I didn't do that. I talked about what its intrinsic value was. Saying swaps don't matter, again, didn't say that. I said that I don't know if they matter or to what degree, and for the reasons I already explained. And then the comment about Roaring Kitty sold his GME, like all of the data points that I'm highlighting, they're based on what information I can find. It's not based on my opinion or my hope or where I think things should go or what I think people might want to hear. I try to say it all the time. I'm not trying to spread hype or FUD. I'm trying to spread information, and then people can come up with whatever they want. So if people don't trust me, that's okay. They don't have to. My hope is that the information is still useful. That's my hope. But anyways, back to this really quick. On Anthony says Dizzy is a merit. I don't even know what the fuck that is. Merritt's acolyte, take with a grain of salt. I honestly don't even know what that is. And I'm also not going to lie to you. I am currently searching the term acolyte. I don't know what that is either. You hit me with a bunch of things that I don't know. Let's see. A person assisting the celebrant in a religious service. Oh, okay, got it. Have an idea of what an acolyte is now. I don't know about merits. But anyways, Lascivio says, one of the interesting things about swaps is it seems like a way to get someone to go short for you. You open a swap bank. So here's the problem with swaps is, again, like, and that's why I don't know how much of an impact. I wouldn't suggest that they have no impact or anything, or that they don't matter. But the problem is that they're like, if you go through and you watch The Big Short with Scion Capital and Michael Burry, he went to the banks and he created swaps with the banks, right? The nature of a swap, it's a derivative. But rather than something like an options contract or a futures contract, which are standardized derivatives, swaps are like black boxes. They can be whatever you want them to be, provided you can find a counterparty for your swap. So even if you have a swap that's coming up on expiration, you can just go back to the counterparty and you can say, I want to create a new swap with you. So I think it's, let me see, where, to Noah's point, he's talking about if some of these swaps can be readjusted. Let's see. But the other problem is even if they can't be readjusted, they can still be, you could just create a new one. Noah says, check Chewy margin tab. Let's see, Chewy margin. Notional, exercise, floating rate. So this shows the rates that we're at. Where's the, I don't want to misread it. Ace of Spades says the problem is we can't use swap data because it changes too privately. Sort of. I actually don't know. Again, I'm not convinced on that just yet. And this is what Newton and I were texting about a couple nights ago, is that I'm also not convinced that there's not some sort of signal that can be derived from swaps. Because if the way that the swaps are being handled includes the movement of an underlying for some degree, or if it impacts the ETFs and the redemption creation cycle, it creates a potential for things to move. I just don't know. That's the problem. And that's the problem with swaps. So again, like for the people that are upset that I'm not sure if swaps are the correct answer, like, I don't know what to fucking tell you, but I don't think that anybody could conclusively determine from swap data alone that it like is the thing. I'm not saying that it's not an impact. I don't know. But it's another interesting piece of this puzzle. And that's the part that I'm honestly just absolutely fascinated with, is how this entire puzzle works. Willie says, remember in The Big Short, Burry was furious how long it took for big players to actually close on their positions. Yeah, definitely. Absolutely. Noah, back to this though. Where does it show me? I thought you were saying that it has somewhere in here if it could be extended or rolled. I don't see that. I see floating rates. I see currencies. I see expirations. I see the date that it was launched. Noah says, I think it got cut off on the other tabs because of anti-comms. Got it. That's okay. The part I was curious about there is just to see like to what degree or how they even think about the extensions. Because here's the other thing that, like, again, we kind of have to look at here. A lot of these are really short-term swaps, which is very funny to me. Dizzy says, to be clear, your channel is valuable. Was only given feedback from group chats. It's easy for people to think everyone. Yeah, of course. And I don't know shit about the group chats, man. And I have to imagine people have all sorts of colorful things to say about anybody. I'm used to that at this point. My only hope is that people like you are willing to at least direct them to parts like this of these conversations, so that there's at least the opportunity for them to understand the perspective. Some people are going to move to conclusions very quickly, which is what it is. But yeah, that would be another really important detail, in my opinion, from the swaps, is because a lot of these are really short-term swaps. So my guess is a lot of these are not going to be taken to expiration. And my guess is a lot of these are just going to continue to kick the can around. So for Noah, I think one of the interesting things to do with swap data is to track when they disappear. So what I would do is create a data set that, as we obtain new swap data, to see when they're getting taken down. Right? Because that's another assessment and guess I would have, is that they're not going to be taken to expiration like most derivatives. My guess is that they're going to be moved before then. And this is the other thing I would expect, is this right here, where there's a lot of longer duration swaps. So this is also interesting to me, that a lot of these are actually pretty short term swaps, right? Like 2 months. And this isn't even worth that much money. That actually is really interesting to me. I don't know why. I don't even know why you bother with a $12,000 swap for 2 months. Because this, I actually don't fully get that. $12,000. Now for this block, for the 4th, the value there, yeah, see, like even this, it's not a lot of money. It's $3.4 million. So like even all of these swaps combined, like if you think about all of these swaps, let's say they're taken to expiration and they involve movement of the underlying. This involves moving $3.4 million of the underlying. So if we take a look at, let me turn this off. If we take a look at that in the context of if GameStop, what was the volume today? So it was 9,272,417, and it's trading right now at 22.4. So the notional value transacted today was $207.7 million. So if all of those swaps expired on the same day and they dealt with movement of the underlying, it's still a $3.5 million value of a position in something right now, unfortunately, that's easy to borrow, and transacted $207 million. When I look at the movement of GameStop, a couple things I think are really important drivers of the price, and I do think Roaring Kitty is one of them. I really do. He has an ability to impact the price with his movements and how he does that. So I think that's part of it. I think the other part of it is scarcity. So creating a scenario where shares are harder to get and harder to hold short. But the problem is, especially with the most recent at the money offering, the scarcity issue changes a little bit. I think with the ape community and kind of their persistent behavior, I think that they can help put a dent in it again. But a lot of shares flew out. So the way I look at this is, again, from a general supply and demand perspective, I try to see where the stock behaves. And if you guys actually remember yesterday when I was talking about this, my perceived near-term floor is like $15, not $10. And the reason why I think $15 could be the near-term perceived floor is I used the prior scenario of it being at a low of $10. And I simply say, do I think GameStop is in a better position now than when it was worth $10 here, or worse? I think it's in a much better position. So even though the intrinsic value of the stock, I think, was like high 8s or 9, technically according to like ChatGPT, my guess is 15. And it's based on this volume node here and based on the just general qualitative assumption where this, I think GameStop is in a better position now than where it was here. So I do not think it would go all the way back down to this. I think that there's going to be some sort of premium for its new footing. What that premium is, I don't know. Again, that's why I'm just guessing off of this volume node where people were really willing to transact it at. But I mean, unfortunately, it looks like we might find out because it's definitely starting a bit of a downtrend here. And as I talked about in the video today, sale volume is picking up a bit. So we'll have to take a closer look. All right, you guys, I'm going to go grab some dinner. Absolute blast hanging out with you all. Thank you all for sharing information with me, giving me some ideas on what to look at. I absolutely love doing this stuff with you guys. And on Thursday is when we're going to do the next GME session, like actually diving deep into stuff. So I'll spend some time prepping with you guys for that. I'm looking forward to diving in. If you guys need anything, as always, just let me know. Love taking a look at what you guys are looking at. Be an outlier. I'll see you guys later.